Hey, my name is James Nicholson and welcome to my YouTube channel. Inflation has gone up at a huge increase this month. It's terrible news for mortgage holders. It's not great for business owners either. I can't dress it up in any way and pretend this is great at all. But in this video, I'm going to talk about what you could do with your mortgage. What are the expectations? The markets have already reacted and I've got their expectations on how many rate cuts we'll get in 2025. That's important to know, and unfortunately that is bad as well. It shows how quickly things can turn around. I'm going to talk as well about why this has happened. It's not just Labour's budget, in case you're thinking I'm just going to say that. That is part of the reason. But this video is really going to give you an insight into what's going on, what we should be doing to prepare ourselves, and much, much more. So if you're new around here and you've just stumbled across this channel, make sure you subscribe to the channel over there and hit the bell notification. We got new content every day on house prices, interest rates. We talk about property investing and much, much more. And let's get some more views on this video because this is important. So make sure you smash like, tickle like, do something to that like button. That hits the YouTube algorithm and pushes this out to more people. And last thing, share the video. I'm sure you know someone that's got a property, that's got a remortgage coming up in the next 12 months that could benefit by knowing this information. So smash that and WhatsApp it to them, email it to them, or Facebook message it to them. So what's going on? Well, the inflation data's out and it's worse than people were expecting. Reuters had a poll and lots of other economists were polled on what they were expecting inflation to jump up to. And the consensus was we were going to hit 2.2%. We didn't. It's way worse than that. So CPI has gone from 1.7% last month up to 2.3%. Now, someone in the comments yesterday on my video said, what kind of economist are you? That's not bad. That's not too much. Well, it is, because the consequences of that rise mean that the Bank of England are pretty much very, very, very unlikely to cut rates in December. And that hits a lot of people with mortgages. It also means that there's uncertainty. So swap rates, the rate that the banks that we borrow from, so we borrow from HSBC, NatWest, Santander, places like that, they're likely to get an increase potentially in their borrowing costs. Hasn't happened yet. We've got to keep an eye on that. Maybe they don't, maybe that's already priced in, but we've got to keep an eye on that stuff. And if that does happen, that means mortgage rates, the rate that you pay and I pay, could increase in the short term, which isn't good. So even though you might say, well, it's close to the 2% target, it is going to have a big impact on things. So they were off massively on that, but also that's a huge increase, 1.7%. Remember, this is an annual jump to 2.3%. That's huge. Why has this happened? Energy. So it's all down to the energy costs. And this is frustrating because all around the world, we have the highest energy costs at the moment. And look at the costs in Europe. Do some research on the cost of energy in Europe. You'll see how much cheaper it is for gas and electric than what we pay. It's crazy, the difference. And what's also very frustrating is that the profits of these energy companies, some of them have tenfold increases. British Gas, for example, I talked about that yesterday. Their profits went from 75 million to 750 million. That's the latest profit data that they've got. 10 times the profit. It's just taking the absolute mick. They're profiteering and the government just don't care. They're not doing anything to stop that. That is frustrating. Now, the energy costs are going to hit this next sector, which is the big problem, and they constantly talk about this at the Bank of England, and that's the service sector. So what do I mean by service sector? I mean someone like a barber, someone like an accountant, someone like a solicitor, a restaurant, for example. The service sector is the biggest sector in the UK, and that is constantly spoken about at the Bank of England meetings, how they have concerns that the prices are going up. How much have they gone up this month? They've gone from 4.9% to 5%. And that is going to be kept an eye on by the Bank of England. Now, I'm certain that the service costs are going to increase. Why? Because the energy costs have gone up, and energy is one of the most expensive things. If you run a restaurant, you think of all those cookers that you've got, heating the property to an acceptable standard. It's not a warehouse. It's got to be warm in there. You're not going to go into a freezing cold restaurant. That's going to hit them really, really hard. 10% increase we had in energy costs this month alone, and that's where pretty much all of this inflation increase has come from. And I just think it's unnecessary. Now, what also we've got to keep an eye on, so the service sector, the costs are at 5%, which they're worried about. That's one of their big concerns. They've got energy costs, but we don't have in this data yet, which we're going to get in future months, is the national insurance costs. So the increase in national insurance means that service businesses are going to have to put their prices up. The increase in minimum wages means they're going to have to put their prices up. In Dorking, where I'm from, the council are saying they're going to have to put the council tax up because of the national insurance increase. The increase in wage costs to them means they're going to have to pass that on to the council tax, and that is going to be a problem for people. So service sector, I just don't see how it's possible that it doesn't go up in the next few months. And that's one to keep an eye on. And this is relevant to property because you've got to know that while inflation is higher than the 2%, the probability of a drop in interest rates drops significantly. So core inflation, which strips out the volatile stuff. So the volatile stuff is things like energy, it's things like food, tobacco, alcohol. Those have volatile prices. They can fluctuate quite a lot on a regular basis. But core inflation is also going up. That means that we've got the core inflation was at 3.2%. It's gone up to 3.3%. So that's something to keep an eye on. And what are the expectations going forward? Well, a lot of analysts are now saying that they expect, and I'd rather listen to the analysts because they weren't massively off. They said 2.2, it was 2.3. The Bank of England said at this point would be at 2.7, right? But the expectation is that inflation will hit 3% in early 2025 and then drop off. So that really does eliminate the chance of mortgage rate cuts. So what have the Bank of England said about this? So they're saying that the reasons for these problems are twofold. The budget. We know the markets didn't like the budget. They didn't feel that the increase in spending by the government was the right time to do that. The increase in national insurance and minimum wage at a time where we're trying to bring service inflation down. The markets didn't think that was particularly the right time to do that stuff. And so that's really going to be a difficult one as well. But they're also talking about Trump. So Trump is a bit of a wild card, and we'll have to see how this one plays out. But the big concern is not Trump himself, it's the tariffs. So Trump is saying anything that's imported into America will have a tariff. When he's doing his talks, he goes with crazy numbers. For example, I've heard him say that he would put tariffs on cars that are imported between 200% and 1,000%. Unlikely that he's going to do that, but that has that volatility in there. So they're saying that imports will have tariffs. That's likely to cause inflationary pressure in America. That means that the Federal Reserve might have to increase rates or not cut them as quickly. And we like to mirror that. So that's going to impact our economy as well. So these are just wild cards. It might turn out to be nothing. Maybe Trump's policies work and everything is smooth, but they're uncertain at the moment. That's the thing. It's such a new thing to put tariffs on so many things at once. We've had tariffs for years and years and years. They still have them on stuff, but the expectation is it could put blanket tariffs on a lot of goods, and that is uncertainty. So that's what the markets don't like. Once it happens and we see what the result is, things will settle down. So what are the markets saying about interest rate cuts? Because this is a property channel. What is that? This is quite surprising. The markets were saying prior to this inflation data that we would get 3 interest rate cuts in 2025. That is lower than I was expecting. And now they're saying that we will just get 2, that we won't get one in December, and we'll only get 2 interest rate cuts in 2025. Now, that could change. So if the economy does massively drop, because you have got big businesses now coming out every day in the media saying we will need to increase costs and we will need to cut staff because of national insurance and the minimum wage increases. If we suddenly do go into a recession, that could change and rates could get cut quite quickly. So it's interesting to see what happens. So far, the budget has gone down quite badly, and that's a fact. Like you can say what you want about it, but the markets haven't reacted well to it, and they do have a lot of power and sway on interest rates and stuff like that. So what we need to happen is Trump to get in, get started, see what his policies are, see if what he promised leading up to the election actually happens, and then see how do those tariffs impact the markets as well. So it's an uncertain time. So I've said this in every video, and I want to get this message clear and out to lots of people. If you have a mortgage that is going to expire in the next 6 months, I would recommend that you speak to a broker now. Speak to a broker now. Get a deal agreed in principle with a lender. So what I'm saying is, if you can go to a lender now and you can get a rate, you can get a rate of 4.5%. That's not too uncommon for residential. So you go to the lender, you get your rate agreed at 4.5%. Maybe that doesn't start for 6 months. You stick on the rate that you got till you finish it. Then at the end of that, you swap on to this new rate. Now, if the whole country goes crazy and everything drops and all of this kind of stuff happens and we go into a recession and then they slash interest rates, you can swap on to that newer, better rate before you start. But if, as the market is expected, that the mortgage rates could go up, you've secured the best rate. So your rate won't go up. You've locked in at your deal at 4.5. If they whack the rates up to 6%, you will stick at that 4.5%. But if they drop the rates to 2%, because you haven't started that deal, you can then move on to that better rate. That's what I want to get the message out about. So that's definitely worth sharing this video with people, making them watch and understand that. If that can save a few people some money on a remortgage, brilliant. That's what we want. So the inflation data isn't great. It wasn't predicted by a lot of people. It's worse than our expectations are. We've got to see how the budget plays out with service inflation. That's the one to keep an eye on. You might not be interested in services as much, but if you do have a mortgage and that's what you're worried about, that's the number that you want to see coming down. Let me know your thoughts, questions, opinions and observations in the comments below. Do smash like, that really helps. Subscribe, check out all the other content on my channel, including this video right here.